Hello everyone, welcome to another live stream. So hope everyone is doing well. Today is Thursday, so it's the regular live stream at 5 p.m. So sometimes I switch between, or is it 4 p.m. London time? Sometimes I switch between 4 p.m. and 5 p.m. London time. Today it is 4 p.m. London time. So yeah, getting into the markets. Well, we did have some news. This week has been active with some news. Of course, the general focus is on the interest rates. It's on the central banks. It is on inflation. Forex is basically powered by interest rates currently and inflation concerns. So I'm gonna give a brief summary of what is happening with the Forex market or with the news in terms of inflation. And then we can get into some technical analysis and some charts. This week we had, this is the euro and US dollar, we did have CPI. So CPI is a measurement of inflation. So core inflation right here. And as you can see, the actual number was higher than the forecast and it was higher than the previous number. What does this mean? This means that inflation is slowly going up. So inflation is slowly going up like this every month. And if you want to take a look at that chart, you can just Google inflation rate US, and then you're going to see the graph, which is steadily going up. So if inflation is going up, that means that the Fed is going to need to fight inflation. They want to keep inflation at a controlled level. And that means that they could potentially increase interest rates. And that would be bullish for the US dollar. So that means that this chart, let's go to the daily. This chart could potentially go up, right? This could happen, and we can actually follow this whole momentum up. So that is the general story. And also the second news event that we had was today, I believe. And it was PPI, which came in a bit higher than expected. So the forecast was 0.3. We came in at 0.4. So yeah, a bit higher than expected. And that is also kind of a sign that inflation is creeping higher. So we had two major news releases this week, and both of them were, let's say, cautious or an indication that inflation is rising. So the eyes are on the Fed for the next meeting. Mohan, hey, what's up? Nice to see you. So you finally caught the live stream. That's great. I want to quickly show you the Forex calendar. So I want to show you the Forex calendar. And I want to see, let's try stop screen, present, share, window, here. Now this is very important. This should definitely be on your browser. And this is the Forex Factory calendar. Very, very important. So what you can do is you can click this filter. You can go to the US dollar and you can go to central bank, apply, and then you'll see when the next Fed meeting is. And it is going to be on the 19th of March. Okay, so on March is going to be the next Fed meeting. It's going to be a pretty important one. And then we will see if the Fed is concerned about inflation, if they will maybe raise interest rates or maybe change their stance so that the US dollar can start gaining some strength once again. Okay, let me get back to my live stream. So definitely keep an eye on this calendar. What does this mean for us as just 1 second, share trading view? What does this mean for us as currency traders? Well, it means that possibly our dollar pairs may continue with this overall downtrend that we saw right here, right? So we had a nice downtrend, very nice, very sustained. And then we were pretty flat and range bound right there. So maybe we can continue down with that dollar strength. That could be a play. And then I'll definitely be looking for some, let's say, sell setups on the Euro US dollar, the Aussie US dollar, and the pound as well. So those are the fundamentals. If you guys have any questions or any chart requests, definitely put them in the chat. I have my chat open here on the right side of the screen. And now I want to just do the technical analysis of the euro and the US dollar. Did I take any trades? Not recently. I took a couple trades last week. I'm going to go for my trade journal. Let me see. So, trade journal. And I did take the Aussie and the US dollar on February 6th, which was, let's see, February 6th. That was Thursday. Okay, so I probably covered that trade. Yeah, I definitely did. It was the flag. So let me show you that one. Aussie US dollar. It was this flag, right? What is this now? Here is the flag. So I think I covered it. I must have covered it because it was Thursday morning. Here was the flag. Pretty nice, pretty high probability, pretty small tight flag, but unfortunately it did end up being a loss. So this one unfortunately did lose. Other than that, I didn't take any more trades. So other than that, I was pretty patient for the rest of the, let's say, week or days. And currently, I mean, we're not printing that interesting price action. This is not that interesting. We do have like this V reversal. So at this point, I was interested to possibly look for some high probability buy setups, because a V reversal is usually a bullish pattern, and you can possibly get an uptrend out of this price action. But here we didn't get it. Instead, we just retraced heavily. We got a big fat red candle, and now we're just ranging around. So EU is not on my watch list right now. EU is definitely not on the watch list, and I'm just looking for more momentum. I'm looking for the price action to develop a bit more. What is this? Let me see. Okay, it's nothing. That's super interesting. And that is the general story with the dollar pairs as well. So they had this sort of a V reversal print as a bullish pattern, but there was pretty much no follow through. The follow through was very weak. So the next one is the Aussie US dollar. And the Aussie US dollar is pretty flat right here, pretty flat and range bound, pretty stagnant. So I would expect actually to see more range bound price action on the Aussie US dollar as well. If you just zoom out, this looks pretty corrective. I know an interesting trade that we covered in the Zentum call last week was, or not last week, sorry, yesterday, was this sort of a liquidity sweep short. So you could have went short here because we did take out these highs. Okay, you have this major high, this one, and then it gets taken out. Red candle prints, and then a sell entry. You could have went in with a market sell and a 10 pip stop loss, aiming for, let's say, a 3-to-1 risk to reward, because it was a flat range. I personally didn't take this trade. I'm pretty careful of trading ranges as I'm currently in drawdown. So I'm kind of relying on the trending entries to actually, let's say, get me out of the drawdown. And if I'm out of the drawdown and make some, or when I'm out of the drawdown and when I make some nice profits, I'll have more profits to play with to take more, I would say, risky entries, such as trading the range. So this would be a liquidity sweep entry. Something that I noted in most books that I read. So if you're in drawdown, you should definitely rely on your best setups, on the setups that you have the most confidence in, and that is gonna be the thing that actually brings you out of the drawdown, because you want to stay confident, you want to stay positive as well. You do not want to get into, let's say, taking too many setups and just making the drawdown even worse. And also, one more thing is what traders usually do, like the best of traders, what they do is they start the year, they make some profits, let's say 15% return, and then they use those profits, they use that monetary amount to maybe get in some more sketchy, into some more sketchy, into some more risky setups, because then they have very not limited downside, but they have a lot of profits that they can play with. So that is the concept that I like as well. Start the year, use the OG entries, like the entries that you trust most, the entries that you have the most confidence in, make some profits, and then use those profits to take some new entries, such as, let's say, the liquidity sweep or the internal reversal, or whichever ones you want. Mohan says, kind of hoping it breaks out. I mean, the Aussie and the US dollar, head and shoulders on higher time frames. Let me see. Well, maybe on the daily. I'm not sure exactly if I see a head and shoulders pattern here. I do see like V reversals, which is a bullish pattern. So like I can see the V reversals on the daily chart. It's bullish. Is it a big confluence? It's not that great. I mean, my main thing is hunting for momentum. I definitely want to see a lot of momentum. So until we get some large candles and consecutive blue candles or consecutive red candles, I'm pretty much going to be patient. So I'm waiting for a breakout of this level or this one on the bottom. Until that happens, I will be sitting on my hands. And I also did a live stream on Traders Nick channel like 2 hours ago, and we all agreed that basically the dollar pairs right now are looking a bit flat, a bit corrective. You can see that clearly on the daily chart. See, getting flat in this area. If you're wondering which market conditions I like, this is a good market condition right here. See, this is good. This is a nice downtrend, nice strong downtrend. And this right here is pretty flat and range bound. So there's not much you can do in a flat and a range bound market condition. You definitely need to see a trending one. In terms of the pound and US dollar, looking a little bit better, showing a little bit of momentum, but also nothing that is really sustained. I did have my eyes on this price action at this point because I was starting to see kind of a build-up of some good bullish momentum right here. See, definitely a build-up of momentum, but this could not play out. So we started to be very, very corrective. Yeah, we started to be pretty corrective right here, and nothing came out of that, unfortunately. And then we did continue going up in this more corrective fashion, right? Zooming out, we're kind of flat and corrective overall as well. It may be a little bit easier to view on the higher time frames, let's say the 4 hour. Yeah, we're kind of flat right here. On the other hand, we also have the JPY pairs. This is actually interesting. This is actually getting interesting. So EJ doesn't look that bad actually right now. I'm actually going to put EJ on the watch list. What is kind of the general story with the JPY pairs? Well, the general story is that the Bank of Japan in January, they basically raised interest rates. So that's good for the Japanese yen. How it goes, higher interest rates, underlying currency goes up. Lower interest rates, underlying currency goes down. So since we got higher interest rates, let me see, when was that? Here, BOJ interest rate decision. See, so the previous number was 0.25. They bumped it up to 0.5. JPY gained strength. That means the euro and the JPY goes down, right? And then we had a bit of a bounce. So then we had a bit of a bounce. If you're a fundamental trader, you would pretty much still have a very bearish bias. There was a very good trade that I missed right here. So I know a lot of people from our Discord did take it. Let's say, I think a 25 pip stop loss would be good here. Yeah, 25 pips. 25 pips would be nice. And the uptrend was nice as well. Very, very strong. Very nice momentum, very strong candles. This was definitely giving me a lot of confidence that the markets do want to continue trending up. It happened. The entry was around 8 a.m. on Wednesday. I was asleep, so I basically drove my girlfriend to work. Then my flat ran out of water. There was an issue with the water supply for the whole block. So then I tried to solve that. And after that, I took a small break, went to sleep for like 1 or 2 hours, and this entry happened, so I missed it. Fortunately, this time I got lucky because this would be a loss. I would get stopped out. But again, maybe this could have also just went flying without me, and then I would be pretty mad that I missed the setup. So let's say this wick, this huge wick did not exist, I would still be in this trade. Or let's say everyone else who took it would still be in the trade, and then I would be very, very mad that I missed it. So it can go both ways. This time I saved a 1% loss, but next time I may lose out on a huge winner. Now, I said I liked this. I said I liked the euro and the Japanese yen. So you may be wondering, why do I like it? Well, it is because of this. We're getting some nice bearish pressure. The candles look okay. The bullish pressure is very small, so the buyers are definitely not winning right here. The sellers are still in control. And what I would like to see is a drop. So I would like to see a drop that follows this bearish momentum. So we have bearish pressure, small pullback, another drop down, and then possibly like a sell setup right here. That would be pretty high probability and pretty nice to get in on a sell setup. So that's the game plan. And yes, I'm putting it on the watch list. Currently, general story is JPY pairs do look a bit better than the dollar pairs. The daily chart, just a quick glance, it doesn't look the best, but it still looks a bit better than the dollar pairs, which are just flat in this most recent price action. So yeah, the JPY pairs are at least moving a bit better, a bit more decisively, with a bit more force. And again, this uptrend was very clean. If you did manage to get in on this uptrend, congrats. It was a very nice one. Another good setup, or another interesting setup, was right here. For me, I did not have an order on because it was kind of a bit too far away. So the distance was a bit too high. J. Zach Cool says, what is the indicator on your chart? It is actually, let me show you. If you click to indicators, is this one. GT recent high low by Bong Hyun. And it's not only the red lines, it's also the most recent breaks. So what that does is it basically helps you identify when the market is corrective or when the market is trending. Because here you have very little amount of breaks and it's only the highs getting broken. That means it's a very nice strong uptrend. But let's say here we get high breaks, low breaks, low break, high break, high break, low break. So this part is very corrective. it's just something that helps me to visually identify a trend or some good momentum or another high probability chart pattern. Okay, so yeah, EJ, I'm looking for a sell setup right there. Am I taking into account the overall fundamental play, which is bearish on the euro and the Japanese yen? No, I'm not really. I'm still trading only technicals, but I am looking into implementing fundamentals in the future. I think a great thing would be if I can, let's say, still take my technical setups, my technical entries, but have an extra confluence with the fundamentals. So let's say if the actual technical entry is not that great, if it's like 8 out of 10, then I could look for an extra confluence with the fundamentals and actually take the trade. Or if the trade is like a 9 out of 10, but the fundamentals are against the trade, then I would basically stay out. Then I would not take it. How would it look like on a live example? Well, let's say you have this sort of a candle print, and then we look for a retest. Let's do 30 pips. You wait for the price to retest the low, but there's maybe a little bit of a wick in the on the end of the impulse. Then you could look at the fundamental story and say, well, fundamentals are clearly bearish for EJ, and you could actually take this trade, right? Or right here, you could have said, I'm not really liking this setup. It's kind of an in-between setup, but the fundamentals are against it. So I'm not going to take a trade here, right? Okay, next JPY pair is going to be, for me, the Aussie and the Japanese yen. And I think NJ and AJ look pretty similar. Yeah, they definitely do. They look pretty corrective. They don't look the best. Let's start with the daily chart. So the daily looks, we're getting flat. We're getting flat. We had some volatility, especially here. This was a nice move. Then we were moving. Then we went super flat, broke down, and now we are getting really flat again. So not the best story for us as trend traders on the 1 hour chart. EJ does look much better than AJ. In terms of setups, nothing really caught my eye. Nothing was really that interesting. There was a flag that printed right here. So a flag with 4 main points: first high, first low, second high, second low, and the blue candle is the entry. Okay. So the blue candle is the actual entry candle. But for me, this flag was just far too big. Okay. It had far too much selling pressure, and it just was not high probability. I don't like these larger flags, especially because they have a lot of selling pressure or like basically momentum against the trade. So yeah, that's AJ. Other than that, nothing much else. At this point, it was looking very nice. This was also during the call that we had yesterday with the Zenta members. But nothing really played out. I mean, we had this fat red candle print, and this was a big warning sign in my personal opinion. So definitely a big warning sign with this massive red candle. Because if you're looking for buying pressure, you're looking for buy setups, you don't want to see a lot of selling pressure, as that sort of defeats the whole purpose and makes the whole setup much less high probability. So yeah, this candle is pretty bad, or was pretty bad. And we just, as you can see, fully retraced, broke the low, retraced, broke this high, retraced. What do I mean break the high, break the low? Well, look at these lines. See these lines right here? Those are the breaks. So here we broke the high, here we broke the low, here we broke the high again because of the dotted lines. So that was AJ, and NJ is pretty much the same. We had that same flag print, which was not high probability. We had this really nice buying pressure, could not be sustained. And now we have rejected, broke the low, retraced. The only one for me today And if you're wondering, I'm only live trading these 6 currency pairs. So the only one today on the watch list is actually the euro and the Japanese yen. We still have a couple of more hours on Thursday. We have the whole Friday as well. Could we get an entry? For sure, we can get an entry. I have taken a lot of setups on a Friday, and they were pretty good setups. I actually made some quite nice percentage when taking trades on a Friday. So we still have some time. This still has some time to develop into a nice high probability sell setup. Hey, Gabriel, what's up? I'll answer your question. Just 1 second. I want to finish up on this. If you guys are trading the same strategy as me and you're asking, would I take a flag right here? Maybe. Maybe if we get no buying pressure and if the flag forms in a very clean manner. Maybe I'll take it, but I would much prefer to get a fat red candle and then a sell setup and then an entry, maybe a flag, maybe a break and retest. So just a general entry after some nice selling pressure. So to answer your question, Gabriel, have you started studying ICT? Well, I did a little bit of research on that, and I came to the conclusion that it's not for me personally. It's based purely on technical analysis, and I would say that for technical analysis, I have all of the knowledge that I currently need. So I don't see much. I don't see any point in, let's say, further refining my technical analysis skills. What I know I'm lacking is fundamental skills. So fundamentals are something I'm heavily working on to possibly add another strategy or possibly add an extra confluence to my current strategy. And that is the general game plan. So refining, studying fundamentals. Do the ICT strategies work? Maybe for some people, but the founder of basically the ICT, he doesn't have a track record at all. So he never had a track record. There's no proof that he was actually ever live trading. He did a lot of shady shit in the background, and learning from someone that I know is super shady and there's evidence that is super shady, I don't think is the way to go. Because if he's not making money with his strategy, then how are his students supposed to make money with the strategy? So always look for a track record, look for some proof that the mentor, the actual educator, the teacher is actually live trading what he's teaching. Otherwise, you're basically otherwise his whole income is coming from the education, right? He isn't a trader, he's a marketing expert. And that is what I believe ICT is. He's a master at marketing. Some people that I recommend that you follow instead of ICT would be Trader Nick. So Trader Nick, check out his YouTube channel, very popular. I think one of the biggest Forex channels on YouTube. So Trader Nick, or on Twitter, you have Trader Dante. He's very good. He's a real legit trader. So yeah, those are my recommendations. Follow people that have a proven track record and a proven history of live trading. Hope that helps. And also have realistic expectations. 50% per month return is impossible. It's possible, but it's not consistent results. 150% per year, you could make it, but it's not going to happen every single year. 25% per year, that's very realistic. Okay, 30% per year could be done. But 50, 60, 70, 80% per year, those are some really, really awesome years. And there's very, very little traders who can consistently produce 80% returns every year. Okay, I don't think there's even one trader who had an 80% return in the last, let's say, 10 to 15 years. Maybe there's one. I think it's Simmons guy, Jim Simmons. Let me see. Jim Simmons. Yeah, Jim Simmons of the Medallion Fund. I think that's the name of the fund. He made 60 to 65% return on average in a period of, I think, 15 to 20 years. And he's the best of the best. So that's the numbers that you're looking at. 65% in 20 years. That's really high. I mean, 65%, if you have a big account, even if you have like $100,000 or euros in funding, that can be really, really high. So yeah. Back to the charts, and yeah, I love the questions. Thank you for the questions. If anyone has anything else that they want to ask, definitely put it in the chat, because to be honest, just covering the charts, it's no longer fun for me. I mean, I do like doing it, but sometimes it gets really repetitive. So if you guys have any questions, make sure to put them in the chat. We can break up the stream a little bit so that it's not as monotone with all of the charts. Way back, it was super fun analyzing the charts, but if you do it for like a year or 2 years, it gets a little bit repetitive. That's why I also changed it to like a live stream format, because before I just did a recording, it was super boring. So this is much better where I have you guys in the chat and we can make it a bit more interactive. I can help you guys more and you can learn something new as well. AJ, yeah, sure, we can check AJ. AJ, so is there anything specific that you want me to check? I can give you CJ. Okay. CAD JPY. CJ from Grove Street. CAD JPY. Yes. Let's see. Daily chart. Looks the same as all of the other JPY pairs on the daily, meaning it's not doing much. Not doing much. We do have this. Where's my news? Is it here? Yeah, okay, this was the BOJ. We went down a little bit. Okay, so the daily not looking that interesting. Okay. CHF JPY. Okay. Let me just finish this one to see if there is anything noteworthy. I mean, this was a nice flag. I would have taken this. If I was trading this currency pair, I would have taken this flag right here. Probably would have taken it. There's a little bit of selling pressure, but I think I would be in. It would be possibly a small win. Now it will be a small loss. Now, breaking lower, this looks corrective. So this pretty much looks the same as AJ, if anyone is wondering. Now let's do CHF JPY. CHF JPY. Daily. This actually looks pretty interesting. I would say it looks more interesting than other currency or other JPY pairs on this daily chart. Definitely movement. Nice sell-off right here. When was January? Okay, here we had the BOJ and we just sold off very aggressively. So nice pair, nice activity. 1 hour. This was a good sell-off. If you caught any sell setups here, that was awesome. Then we started pushing up and yeah, nothing really that high probability. What I don't like currently is that we broke this low and retraced. We kind of broke the structure. So we were overall moving up. But now we kind of broke this structure. We broke the high, retraced, broke the low, left a large wick, and retraced as well. So that is not the best thing to see. Okay, that is not the best thing to see. The momentum is still up. We do have a fat red candle, but we're still up with the momentum overall. So I do have a little bit of a bullish bias, a little bit technicals are a little bit bullish, but not the best. Not the best. I think we're getting a bit too corrective. If you want me to combine the fundamentals and the technicals, I would say this is a bearish play because the fundamentals are very, very bearish. on this currency pair, on basically any JPY pair, because the JPY is expected to gain a lot of strength. So the technicals being not the strongest, I would say the general bias is bearish. Okay, so I would not be surprised if we start selling off. I would not be surprised if something like this happens. See, nice start of a sell-off. Okay, if you have any more questions, definitely put it in the chat. So the Winchester Forex Trading Academy, we all know profitable trading becomes boring. Well, yeah, that's kind of true. In the beginning, it's very exciting. You do a lot of research. You are very excited to implement your research in the live markets. But then as you keep doing it and doing it day in, day out, for me, filming videos with the charts, with the same 6 currency pairs, it gets a little bit repetitive. And it gets a little bit boring. Yeah, that's true. That's why I try to do the live streams. I try to learn fundamentals right now, make things a bit more interesting, refine my edge, create something new that kind of breaks up the monotone, let's say the monotone atmosphere of trading every day. Now, since we covered all 6 of my main currency pairs, I want to do something interesting, which is this week gold. So gold is very, very interesting, very bullish. So gold looks very, very good. Exactly, not in a negative way, just the routine kicks in and the excitement goes, especially once we have our emotions in check. Yeah, you can get into the routine and then it gets a bit repetitive and a bit boring. It's all a part of the game. If trading is boring, that means you're probably doing something right. Because if you find trading to be extremely exciting, then you're in it for the thrills. You're not in it to, let's say, execute on your edge and extract profits. You're in it because you love the thrill. So it's much better to go to the casino if you want the thrill of let's say, gambling and betting money. So trading should be pretty boring. Like the best trading is done off the charts by doing research, extensive research, hours of backtesting, hours of fundamental research, and then going to the charts at the exact day, exact time, exact instrument, and placing a buy or a sell. That's it. Clean your hands, leave the trade be, and your job is done. So the actual chart work or the actual execution or putting in the trades in your MetaTrader, clicking the buy and the sell button, should be pretty easy. It should be pretty simple, and it should be like the least amount of work that you do. Preparing for the trade, researching, refining your edge, preparing with a trade plan, preparing the trade size, calculating the trade size, setting your levels. I'll get in here, I'll exit there, I'll add to the position here. That is supposed to be done off the charts, and that is what takes a lot of effort. And it's not that exciting most of the time either. It's a lot of deep research, and that's repetitive as well. But it is what that's what it takes to become profitable. And also one more thing, which is pretty interesting, that I heard on a podcast I was listening to. It was from Trader Dante. I'm gonna put it in the chat if you guys want to check him out. He's very good. He worked at like a real prop firm, and he was basically at the same desk with some millionaire traders who were making hundreds of thousands of dollars every single week. So that guy definitely knows what he's doing. But he said most people come into trading because they want to have free time, they want to make a lot of money, and they just want to sit on the beach, place the buy or the sell button 2 times per day, and that's it. So they come into trading for the lifestyle. Whereas the best of traders actually work 12 hours per day, maybe even more. So the best of traders are super prepared. They keep researching, they keep refining their edge, and they are sometimes at their desks trading, researching for 10 to 12 hours per day. So that's the exact opposite of why most people come into trading, at least online. Most people come for the freedom, because you can chill on the beach, because you can travel. And actually, real profitable traders know that you need to put in the work. Now, that doesn't mean you cannot have fun. You can have fun. For example, Nico, Griff, and me, we regularly go to vacations and like to different countries. But when it's time to put in the work, we're at the screens for at least, let's say, 6 to 8 hours per day. So we're at least 6 to 8 hours per day, work days, even the weekends. Sometimes we're working, we're researching, and that is how we are. That's what enables us to build a trading edge. So it's basically like a full-time job. If you want to keep it really serious, it tends to be like a full-time job. If you want to be the best, you need to work like the best. So yeah, that's the little rant on why traders get, or why people get into trading. So gold is just shooting up. This is the daily chart, mind you. Mubarig, hey, what's up? Nice to see you as well. This is gold. This is the daily chart. This is what everyone is currently talking about. So we had sort of a rotation. We had Forex, right? We had Forex. We had the JPY pairs, for example. We had the massive sell-off in July. Then we had stocks. Huge rally up, basically all of 2024. Then we had Bitcoin. Bitcoin came in the story in, was it in? Okay, February 24, and then also in November. And now it's gold. So now everyone is talking about gold, and everyone is trading gold. That's also an issue in this industry, because people that come in, they tend to switch from one asset to another. So 1 month, stocks will be hot. Next month, JPY pairs will be hot. Month after that, Bitcoin will be crushing. And then people just switch their strategies, switch their focus every single month. So they're never profitable. If you want to be a profitable trader, not even a great trader, if you just want to be profitable, you need to focus on one asset, and you need to be an expert in your asset. Okay, so if you choose Forex, be an expert in Forex. If you choose crypto, be an expert in crypto. If you choose gold, you need to know everything about gold. I chose Forex, so that means that for me, my main goal is to know absolutely everything that I can about trading, let's say, the euro and the US dollar, or the euro and the Japanese yen. That is my goal. So keep your focus small, keep your focus narrow. Don't jump from one asset class to another, because every single month there will be something different that is active, that is hot, that is trending, and that everyone is talking about on Twitter. So that will just lead you nowhere, and it will lead you chasing the holy grail, which of course does not exist. Gold is very bullish. The technicals are very bullish. I don't see any signs of slowing down. What is the fundamental play behind gold? Well, we first had tariffs. So the market got scared. The stocks actually sold off and pretty much became very flat. The tariffs, and also now we have a drop in GDP. So economies are shrinking a little bit, and also inflation is going up. So Trader Nick talks about this. He does a great breakdown in his last video on his YouTube channel if you want to see it. So recently we had both the economy going up, so GDP going up, and we had inflation going up, right? So in this period, let me try to draw it because it's really interesting. In this whole trending period, we pretty much had both GDP going up. We can do it like this. GDP and inflation going up as well. And that's going to be generally, I would say, good for the stock market. But now what's happening? Inflation is still going up, but GDP is actually going down, right? So GDP is going down. And as GDP is going down, not many people want to get into stocks. They would rather get into an asset such as gold, right? So the market conditions are switching a little bit. They're changing a little bit. Why don't you want to select this? Come on. And that is why gold is pretty much shooting higher with a lot of strength. So it's tariffs, it is the lower GDP, it is the rising inflation. And gold looks bullish both fundamentally and technically as well. So for gold traders who really know their shit, they can make some great percentage in these markets. But of course, for me, I'm a Forex guy. My specialty is Forex. I chose that, and I'm like really going deep into Forex. So I don't have any time or energy or mental capacity to research gold. And I have no business. I have no business looking for buy setups on gold because I know that I don't have a clear trading edge. I would much rather devote my time to fully study, fully research Forex and be really proficient and be an expert in Forex than to be, let's say, a jack of all trades, meaning that I'm trading Forex, I'm trading stocks, I'm trading gold, I'm trading crypto, and I'm not making money in any of them. So in terms of the 1 hour chart, which is what I analyze for Forex, we had some very nice uptrends. There were definitely some technical entries that I did like on gold. Yeah, it's not that clean. Gold can be a bit choppy. Not the cleanest formations, but again, definitely moving up. What you can do if you want to research gold, I would suggest not looking at it as a trending market, like in Forex, as a very clean, established trend, but more of a channel. So it's a little bit better to target the trend line. So let's say you're bullish fundamentally, let's say you're bullish technically on gold. I would suggest waiting for the price to hit the trend line and then be a buyer, right? So it would look something like this. Be a buyer here, buy again here. Same thing goes for the S&P 500. Pretty much moves in a channel-like formation. Pretty much has this trend line right here that just keeps the trend line keeps getting respected. Okay, the trend line keeps getting respected. That's pretty bullish. So what you can do if you're trading indices, you can buy when we hit that trend line. And again, that's the difference between Forex and gold and indices, because here we have, this is really clean. Like this is a really clean uptrend. See this momentum? Very nice, very clean. And it's, I would say it's very rare that I'm going to see this sort of clean price action on gold or indices. And I see it very often on Forex. Forex has a lot of this clean price action. Thank you for the feedback, the Winchester Forex Trading Academy. Now I want to talk a little bit about crypto. I have some long-term investments in crypto. It was very popular back in November. Now it's not as popular, and it was popular with the Trump coin as well. But now we're getting a bit flat. We're getting a bit stagnant. And this is not looking the greatest, but we're holding up. We haven't broken the key level. Technical analysis. Technical analysis, I have some big levels. We have this level and the one on the bottom. So those levels you want to see broken if we're looking for setups. If we get two big red candles on the daily chart, that would be really, really bearish for Bitcoin. Okay, that would be really, really bearish. But if we get two large bullish candles, that'll be really, really bullish. So if we can break out of these levels with some nice momentum, I will look to see what will happen. Otherwise, this is in basically no man's land. This is looking pretty flat and stagnant. If you guys don't know, Bitcoin pretty much follows the NASDAQ. So if the NASDAQ has a bullish breakout like this, you can pretty much be sure that Bitcoin will follow. Okay. Bitcoin kind of acts like a tech stock, okay, like a technology stock, and it moves with the NASDAQ. So as a long-term investment, I would definitely recommend everyone to look into Bitcoin, maybe keep a portion of your portfolio in Bitcoin. what Nico does, I love what Nico does. So Nico from Zentum Trading, he has a portfolio, and I think he keeps 30 or 40% of the portfolio in a Forex broker, so in IC markets, because he gets 1 to 100 leverage. So he has huge amounts of leverage, and he doesn't need to keep the full amount in his broker. So he keeps, let's say, 35, 40%. Then he keeps another 30 or 40% in the S&P 500. And guess what? Last year, because he kept a lot of his money in the S&P, he had a massive return. He had a much bigger return than I made in trading. So from here to December, where is December? 30% return. I had, I think, 15 or 16% return in 2024. So this is double. And he made some very nice profits. And also he keeps 10 to 15%, I believe, in crypto, which he did sell just before we reached 100K. So he sold into the 100K mark, which was very, very smart. Congrats to Nico. That was a very smart move, because we're now hovering just below 100K, right? So I think he sold at a good level, especially because I believe he has been holding for quite a while. So what you can do, practical use, let's say you have a 10,000 euro account, put 3 grand into a Forex broker, put, let's say, 5 grand into the S&P, and put 2,000 into crypto, into Bitcoin preferably. Why? Well, because Ethereum is pretty shit. Ethereum is not as strong. I mean, just zoom in or zoom out, not in, zoom out. Weekly. See this? Like, we're not moving. If you were a buyer in April 2021, you would pretty much be break even today. So for, 4 years? 4 years, you would be break even in a crypto coin. So I would say the best bet is still going to be Bitcoin. I do have some Ethereum, just in case, but I do have more Bitcoin, because Bitcoin is the OG. It is the best. It is the OG crypto coin, and every cryptocurrency is pretty much going to follow what Bitcoin does, or it's not going to do anything. For example, Bitcoin has been crushing higher, while Ethereum has been very, very flat. Ethereum hasn't been doing much. So yeah, I'm sorry if you bought Ethereum in 2021. It just doesn't look the best. Also, one more topic I want to cover is round numbers. So I've been reading the book Alpha Trader by Brent Donnelly. Great book. I'm going to put it in the chat. Alpha Trader. Brent Donnelly. I think that's how you spell it. Not sure. Doesn't matter. You're going to find it in the book. He's basically a OG trader. He made $50 million in 1 year of trading for a hedge fund or for a bank. And what he says is, be aware of the round numbers. So when you're setting your orders, when you're buying, when you're selling, when you're taking profit, when you have your stop loss, be aware of round numbers, because price tends to gravitate to round numbers. Round numbers can act like magnets, and that is the exact reason why Nico sold into the 100K mark. Because let's say you're a buyer, let's say you're a long-term holder of Bitcoin, you bought here. This would be a perfect entry. But let's say you did buy here, and your plan is to sell at the 100K mark. Well, you don't want to set your take profit at exactly 100K. You want to put it a bit lower, maybe like 98. Or maybe you want to start selling at 95. You want to sell half of your position at 95 and the rest at 98. So you never want to put in the real round number, because it's very, very likely for the price to hit very close to your amount, like it did here, see 99537, and then bounce off. This can happen very often. So just know that the market loves round numbers, and you can take that, or you can use that to your advantage and set your positions in a way where the round numbers actually help you. Okay, they actually help you. So yeah, the final one I want to break down today is going to be US oil. I usually hate US oil. It's super choppy and it's not moving most of the time. When there's a crisis, it's moving, but there's not a lot of crises don't happen as often. So if you guys have any questions for this ending of the live stream, if you have any chart requests, make sure to put them in the chat right now. Also, if you want to check out Zentum Trading, we have a free Discord and we have a discount running right now. So right now we have a 30% discount, Valentine's discount for Zentum Trading. So you can join, check it out, both for the monthly option and for the quarterly option. So Zentum Trading, 30% off. The discount lasts until Sunday midnight. Make sure to check it out. So yeah, last minute questions. If you have them, put it in the chat. Until you do, or I'm just gonna do basically one more instrument and then we're gonna close shop. We're gonna close down the live stream for today. US oil daily. Most of the time US oil looks like this, but we had a big push up and a big sell off. That's pretty funny. We pretty much came down to the same level where we started, but it's volatility. So even though we came to the same level where we started, experts in US oil could have still made profits in this part. All we care is volatility. All we care is trends. All we care is uncertainty. We don't care that the price came back to the initial level, but we like this. See? So something happened. There was some sort of an uncertainty, and then we had a big rally and a big sell-off. I'm not sure what happened. I'm not an expert. I'm not looking into becoming an expert in US oil. I have other things I want to do with Forex. But you definitely could have made some profits right here. This chart actually doesn't look that bad. I mean, we had a nice rally and a nice sell-off as well. Pretty clean price action. Yeah, pretty clean, pretty nice price action. But then mostly corrective, as I can see here. Very shit, to be honest. Very shit price action. Here, some parts of it are looking okay. Yeah, there's a nice flag on top, which would be, unfortunately, a loss. But what you're going to do, and a nice flag right here. Let me see this one. Yeah, this is a nice flag as well. See, this one. First high, first low. Oh. This is the flag. But this has too much selling pressure. I'm seeing too much selling pressure. Yeah, not the best, not the most high probability. But interesting. And that would be about it. So thank you everyone for watching. Quick recap for today. I have only EJ on the watch list. What do I like about it? I like the selling pressure. I like overall market, or I like the overall formations. I like how the overall candles look. We had a very big uptrend on the 1 hour chart, very strong. Possibly we're going to sell off now. It may happen. If it does, I shall look for sell setups. So that is what I'm going to focus on. Yeah. So good luck tomorrow. Good luck in the next week. I'll probably see you next Thursday. Maybe I'll skip the live stream if there's nothing happening in the markets in my Forex pairs. But if there's activity, I will for sure do a live stream. If you want to get some updates on that, join my or follow me on Instagram. My handle is, so it's at Marcos Trading Journey. Okay, so definitely follow me on Instagram. All of the schedules, all of the live streams get posted on my Instagram. So yeah, we're gonna wrap it up right here. Thank you guys for watching and see you in the next video.